Hey traders, it's the 1st of February 2018. Let's look at the S&P. So S&P is trading all-time highs. We're seeing a slight little pullback. We're going to see a bunch of dip buyers, and it's going to skyrocket and go to the moon. What I actually found here is I dug up some cumulative money flow here for fund flow for 2017 and January. And I just went ahead and overlaid the monthly sums and kind of gave us a net cumulative exposure. And I was surprised what I found because the S&P continued to go up, but I looked at the actual fund flows, and you actually add them up, despite a positive growing market or S&P, we had 11 billion cumulative short here into December. So why is that important? So essentially, it looks like the fund flow, the fund managers have been wrong all of 2017, and then there's a big rush here in December as they introduced $20 billion into the S&P, and now 13.5 billion in January, which pushes the sum up to 22, almost 23 billion here into the S&P. So that looks a little climactic compared to what we have here before. There certainly doesn't look like they're buying low and selling high. What this kind of looks like is that we have a squeeze. So we had short exposure all year long, and then we squeeze shorts and we rally higher. So usually short squeezes don't generally hold. There has to be a mean reversion. Take your pockets, turn them inside out. When you run out of money you can't buy, you've got no more money to add to whatever it is that you're purchasing. So essentially we may actually have a deeper pullback. I guess the question would be where. First I would say, where is this lower trend line? That may speculatively be tested. This area here at 277.5 is a key area. There's a new high and then the big reversal and then an inside and up. So we have a little flag that formed there. This level of resistance was never kind of confirmed to support, so I see prices probably dipping down and testing this 277.5 area. Let's look at a couple more charts here. So now we're just looking at an hourly chart here of a Renko, chart, and we can see that we've lost the trend on the hourly. We're consolidating, and we're rejecting the average true range, the change later exit. So this is still a bearish trend on the hourly. And additionally, we have a ADX sell signal here at the high. So what that happens is now we have a bearish trend and a sell, sell every time it tests that resistance. So the short-term trend is also bearish. Now we are looking at a 4-hour candlestick chart with some very large block trades on top of it with a we're looking at, I think, a weekly market profile on top of that. So now we can see here on the contract market profile over here to the left that we, here's our point of control down here. We're building a pretty big profile out here. So we're rotating the point of control higher, which is bullish. But in between here, we actually have some poor market structure. So we're seeing prices drop and rebuild the market structure. Specifically here, you can see that, let's go here. So we kind of consolidate, prices rally. In each of these weekly areas, we have a value area low, value area high, and a point of control. So a short-term trading perspective is when we break out of one weekly profile and then it pulls back into the value area high, you buy that. And you can see at this time, this is a very good signal. So we break out of this, we trade higher. We're not trading the current weekly market profile. We trade the previous week's market profile because that's where value has been determined. Prices pull back into the value area high, there's buyers there, and then it rallies higher. We kind of continue higher, and there's really, buyers become a little, and they anticipate, they anticipate the dip, and they don't let it pull back into this value area high, so we don't have a good buy signal there, but the trend remains bullish. Here's that bull flag that we have here, this ascending triangle. We break out of it. Now, when we broke out of that, you can see that the main body of the profile is kind of a center distribution that's here. So there's not a lot of market structure between this value area and the previous week's value area. So there's a lot of there's some poor market structure here. So prices currently have dropped down into this area to to rebuild this market structure, but we're currently rejecting the current week's value area and point of control. So I kind of anticipate that as we can see here, the trend is becoming bearish as the Keltner channels start to point down. We may actually continue to break down into the contract value area high here, and that's actually at 278.3, 2783, which is pretty close to that 2775 that I mentioned there on the S&P. And truthfully, if we break down to this level here, we can see that there really is not a lot of market structure, so your risk continues lower into this, the profile here, because there's really nothing here. There's no support. So that actually brings risk a little bit lower down to 2740, 2746.25. And lastly, this is a 4-hour candlestick chart. We can see that the bullish trend has been lost. We actually have a head and shoulders that's formed there. So if we do a measured move, that looks like that might be down to 270, 2775 as well. Now, I'm showing this one because I want to show these big block trades. And these block trades here in contracts, if I look at the filter here, cluster filter, we're looking at 25 to 35,000 are the orange ones. Nope, so 35,000, 25 to 35,000 are the orange prints. The pink prints are 35,000 contracts or higher. That's a lot of money. So I'm showing that because these are key areas, right? So we have a nice big print here. We rally away from there. Big print here, it's rejected. And now we have another big print, and we currently are trading below it. I have red triangles and then the green diamonds. That's actually when there's some asymmetry present here on taking the offer or buying the bid. So the red triangles represent sell programs or sell algos, and the green diamonds are buy algos. So we saw some buying into the close here, big dip. But again, this is a key area. We're currently trading below it. The next area of interest that may be defended would be this next big block. If we lose that big block here at 2805, the next big block, an area of interest, well, actually we lose the point of the value area high previously discussed at 2782. The next big block that we have that provides some structure is around 2747. As we can see through here. So just something else that I wanted to share. I think that we see a little bit of exposure currently in the S&P.